Is the greater Sacramento region real estate market still rising? What about interest rates? What's the best move? Buy now or wait until rates fall? I give you the latest information, and unlike the YouTube fearmongers telling of an impending market crash when all they're doing is cashing in on monetized clicks and trying to sell you a real estate investment system, I give you the real data. Let's check it out. It's the June 2023 Sacramento real estate market update. Let's go. Welcome back. For everyone who has not been to my channel before, I like to start off with this website, Mortgage News Daily. It's a great website where a lot of information around the mortgage industry is compiled into one section. And I like to look at that for certain financial news and interest rate news, things like that. I'm not a loan officer, so whenever I talk about mortgage rates, I like to use this website or some of my preferred loan officers. Since I last did a video, this interest rate that's up here at the top where it says 30-year fixed rate, 6.9%. That's a little bit up. Interest rates in reality change every single day. It doesn't really have a whole lot to do with the Federal Reserve. That's a misconception. Federal Reserve really only meets 8 times a year, while interest rates change several times a day for mortgages. And a lot of what the Federal Reserve does is they have their policy based on economic factors that mortgage rates also go into. So they're kind of using a lot of the same data in why they do certain things. One doesn't necessarily react because of the other. There's a lot of reasons why mortgage rates go up and down every day, and it has very, very little to do with what the Federal Reserve does. Now, the Federal Reserve does put out information that they're seeing, including how inflation is going. So inflation is falling a little bit. So this rate here, by the way, 6.9%. Please, if you're in the real estate market, reach out to me, send me a text, send me an email, give me a call. My info is on this channel. My preferred loan officers, they get wholesale rates. So my clients are getting much lower than that right now. For a 30-year fixed rate, I'm seeing a lot closer to 6% instead of that 6.9. All right, so feel like that's important to note. Okay, so let's get into the data now. This, again, I like to keep everything uniform. So, of course, I work in several different counties, but I like to show Sacramento County because there's so many homes in Sacramento County, and so much of it is more uniform. It's not a mountainous area. There's very few rural areas. There's a lot of suburban properties. So what I do is I look at Sacramento County. These are all the sales that when a realtor puts in a listing, we put it in the MLS, the Metro list. So this takes all Metro list data. That's practically every single listing that was sold on the market, 99% of the homes that are sold probably, and compiles it into one report here. So this is Sacramento County, quarter acre or smaller, because most homes in Sacramento County are in a quarter acre, and so much about home properties change when you're really getting into larger acreage. But Sacramento County, quarter acre or smaller, single family residences. Okay, so this goes month by month here, and this very first graph is homes for sale, homes sold, and pended. So you see way over here on the right is May 2023, because June is not over yet at the time of me making this video. We're going through the end of May, and it takes a week or two to really get these reports compiled. Now, for sale homes, it's slightly higher than the previous month. It's way down from the previous year. Sold homes is continuing to rise, and you can see this red line pending is rising too. So whenever I'm seeing that rising pending, that tells me that next month's sold homes are going to be higher as well, because home goes pending doesn't typically sell and close until the following month, and that's where we end up seeing that data. So the number of for sale homes is up about 5% month over month. It's down 54% year over year. Big reason why we're still seeing home prices rising is because inventory is so low. About half as many homes on the market right now than a year ago. You see way over here in May of last year, 1,500 homes, now 687 for the same month. And then now sold homes, 934. Now that is up about 23% month over month and down about 20% year over year. Now, inventory is down over 50%, yet number of sales is down only 20%. So that's telling you a lot of people are buying homes and there's fewer homes on the market. So it is somewhat competitive out there. It's not like 2021, early 2022 competitive, but if you're looking on selling a home, there's buyers out there. just as long as it's priced and marketed appropriately, you're probably going to get that home sold pretty quickly. Okay, and then pending sales are rising as well. Okay, let's go down to the next graph. And I like this graph because it really shows values. Now, you should never price a home based on dollar per square foot. If you're familiar with home flipping, somebody buys a 1,500 square foot home that is needs a ton of repairs, isn't updated at all. It's like 1970s, 1980s inside. They buy it for 300,000. They put in 100,000 in work. They sell it for 500,000. Same home. So you can't look at that home in two different conditions and price it based simply on dollar per square foot. But this is the average dollar per square foot. In May, 330 a foot. We're about even with August of last year. And anyone who's been watching knows that we hit a peak about April to May of 2022. Interest rates were really rising a lot through that time. And then you saw property values going down. Now, something that people sometimes say is they use this term market crash just as a dip. There's really only two crashes in the last 100 years, and that's Great Recession, Great Depression. Market crashes are extremely rare, but dips happen here and there. There's really not that many of them, or there's slight, very slight, like 1%, 2% level seasonal dips around, usually around December. Okay, so dollar per square foot at 330 now. So that is up 2.5% month over month. It's down 7% year over year, and year over year being the very peak. So we're only down 7% from the peak, and it's still rising. So that can be some good news for at least people who are mindful of their own equity. Really, I think that's very good news for buyers too. Because I think as a buyer, you want to know that when you make your purchase, it's going to continue to rise. And really, I'm not trying to give you financial advice here, but no prices of anything really stay the same. And inflation is constant. It's at least 2% annually, normally. What big driver of prices for everything is labor. And as labor continues to go up, everything else goes up, or one follows the other, kind of. So real estate is something, people need to have a place to live. It tends to be one of the most stable of investments, things of value in your own personal portfolio. So if you wait long enough, you're going to be at the on the rising end in real estate. But it's nice to see that the real estate market is rising, is not continuing to fall. So you don't have to make that guess as much. There's lots of economic things that could happen, deep recessions and things like that can change that. But let's look at the next graph here. Okay, so this is two pieces of data. This shows the percentage over and under a list price that homes are selling. You can see right up here, 101%. That means homes are selling on average over the list price. So for a while, you see that homes, there was a correction, a lot of offers under the list price being accepted. That's less likely now. Towards that peak, 104, 103% of the list price. That doesn't necessarily mean that home prices are like the market is as crazy as it was, because 101% is pretty close to 103, 104. Just prices were higher at that same time in early 2022. So I don't want to say that that's indicative of a very, very hot market, but the market is very stable right now. So this next graph down right below that line there is average consecutive days on market. And a home is typically on market usually for about a week, even in the hot markets, because you're usually not accepting an offer right away. You're usually giving some time for people to view the home and offers to come in. I like to set due dates for offers. That way people know the time that they have. And then sometimes you're countering several offers. So that process will take several more days. So even in a home that's super, super popular and getting lots of showings and getting a ton of offers, your average day on market is still going to be at least a week, often. Anyways, so 24 days on market is the average for consecutive days on market. And the drop from the previous month is a 39% drop. I don't think I've ever seen a drop like that. That is pretty dramatic. And that just shows you that people really came out to buy properties, and they're really coming off the market a lot more quickly. Now, you see earlier in, early last year in 2022, they weren't on the market for very long. Clearly, most homes were selling pretty quickly. This next graph is the average price for sold homes and for sale homes. And the thing that I usually look for here is if the lines are moving together as opposed to separating. And you can see that they have been moving together, and that just shows a stable and rising market. This market isn't very confused about the direction that it's going. And the last graphic here is the reason why home prices continue to rise, and this is months of inventory. You have less than a month of inventory here. 0.8. That means that if everyone stopped putting homes on the market today, there would be no homes on the market in less than a month. And so all the excess inventory that really piled up, when I go back up to this graph up here, where it shows these in the light green, these numbers of for sale homes, 2206, 1869, 1835, and it keeps falling and falling and falling. Well, these green bars here are gobbling up all that excess inventory until it's gotten down pretty low here. So we have 0.8 months of inventory. Now, the number of for sale homes I've seen definitely has been rising. I'm expecting 0.8 to probably rise into somewhere maybe 0.9 or maybe 1 month for this next month. But we'll see. Homes are coming off the market pretty quickly, but there is definitely more inventory right now than there was. This is a very, very common time for people to be buying homes. They love to, what's really common is people love to get in a home before their kids start school. And so many schools in our area now start in early August. So there you have it, some real data. So you can look at those YouTube videos that people say market crashes or happen all the time or something, and you can tell them that's not true. You're not seeing it in any of the real data. And something that people ask me sometimes, because sometimes market dip and market crash are used interchangeably. And really, there's only been 2 market crashes in the last 100 years, Great Depression, Great Recession. Sometimes there's little dips. Clearly, we had a larger dip in this past year, depending where you were, but in our area, 10 to 15%. But now, we're back on the rise. So you saw maybe we're about 7% under May of 2022 and still rising. So to answer my questions in the lead, is the market still rising? Clearly, yes. And that's a great thing if you are a seller or really a buyer, because you're going to continue to have equity when the market is rising. Now, what about interest rates? Interest rates change, every business day. Clearly, they are a little bit higher than they were at this time last month. And they could rise a little bit more. It's really hard to say. There's lots of economic data that can make that happen. But if you are in the market and you see that average rate that I showed you on my screen there, I think it was 6.9% today. Reach out to me, because I have some great loan officers that get wholesale rates that'll be closer to, I'd say, a 0.5 point to 3/4 of a point lower than what that average rate is. And I don't want to talk about loans too much because I'm not a loan officer, but something people ask me a lot is, or they say to me that they can't buy a house because they don't have 20% to put down. You don't have to have 20% to down to buy a house. There's often first-time homebuyer assistance programs, 1% down. FHA, just a standard FHA loan, is 3.5%. VA, if you're a veteran, 0% down. But that doesn't really work for everybody. There's 3% conventional, and you can go from there. So really, you don't have to have that money. Now, another thing that people have asked me about is the current presidential administration that they heard that there's some law that penalizes you for having good credit, and a lot of people went to this kind of thought process. Perhaps it was something they saw in the media, that people with bad credit or lower credit than not as good of credit are actually paying less for their mortgage than people with good credit, and that's not the case. Now, what's the best move? Buy now or wait until rates fall. Waiting until rates fall will almost guarantee you, unless there's a crazy recession or something like that, a higher sales price. What we've been seeing is, as rates are steady, we've seen the market slow down for appreciation. When we see rates rise, we see the market slow down for appreciation. Now, there was a point where it got well above 7%, then it dipped below, actually below 6%. then prices started rising like crazy. So if you're looking at like what your payment would be on a house and you're hoping, okay, well, how about I wait for rates to fall? Well, prices are probably going to go up when rates fall. Your best bet is to probably look at it now instead of waiting until then, because it's probably just going to cost you a lot more. Ignore the people there on YouTube trying to sell you a house investment system, telling you there's a market crash. They're just very, very, very uncommon. And last month I showed how low foreclosure rate is. It's near all-time lows. I hope that is great information for you. If you have any questions for me about real estate in the greater Sacramento area, whether that's Sacramento County, El Dorado County, Placer County, and beyond, I work in several other counties, including Stanislaus and Solano and Amador. I'm skipping some here, YOLO. So yeah, please reach out to me. All my information is right here on my YouTube channel if that's where you're finding it, or you can find me online. I'm Brendan Mohr, the Realtor. Thank you for watching the June 2023 Sacramento Real Estate Market Update.